Hey, what's up, everybody? Welcome to episode number 152 here on season number 2. And today we are getting into Stash Retire Recap June edition. So these videos are meant for educational purposes only and not meant to be taken as financial advice. You are responsible for your assets and to properly protect them. So always please do your own research. This month, my Stash Retire account, like last month, beat my Stash Invest account. And when it comes down to it, I believe that it's because Stash has been taking all my money. All right, come on, I'm joking. Come on, guys. I actually think the reason for this, like I was saying in the previous Retire Recap videos, is because I've been able to buy a lot more equity or stock ETF holdings instead of that bond holding that I call Park My Cash, that has literally been taking and sucking almost all my money that I put into my Stash Invest account. On Stash Retire, actually 3 out of my 5 target equity holdings have already been achieved. So that's 25% into Delicious Dividends, 25% into Park My Cash, 15% into Real Estate Tycoon, and then now I'm currently working on getting to 10% invested into Robots Rising, which right now Robots Rising sits at about 5%. And then from there, like I've been saying, I plan on adding one single stock to the portfolio, probably turning that up to about 5%, and then go ahead and picking up the rest as I can afford them when my percentages are all correct. So my hope is to one day eventually own every single ETF or single stock that's on Stash, but that's going to be a long time from now, I can already tell. But if you're sitting there kind of wondering, like, Coach, why do you run your account like this with target percentages and then regular monthly deposits and very, very structured on your account? And really, I think it comes down to, for me, I like the super basic kind of account. It doesn't take a whole lot of time. I don't spend a lot of time trying to time the market with this account. I don't spend a lot of time trying to buy a lower stock or buy a higher stock or predict where I think the market is going, which honestly for me helps alleviate a lot of emotion because everything is already planned out. And all my job is to do is basically execute the plan. So basically my plan with Stash Retire is that I get to buy an equity basically every 2 weeks. I deposit $20 or $15, and then from there I basically purchase the lowest target percent ETF that I hold. So for instance, like I just made a deposit today and bought Park My Cash because Park My Cash was at 24%. Well, I need to be at 25% before I can move on to buying more Real Estate Tycoon or even buying Robots Rising. So that's how that all came about. So it's like a tiered level. It's like Delicious Dividends is number 1, then Park My Cash number 2, Real Estate Tycoon number 3, Robots Rising number 4, and then whatever single stock I choose to pick will be number 5, and then the rest of the ETFs will be number 6. You see what I'm saying? But let's go ahead and leave kind of the strategy alone, and let's go ahead and talk numbers on the actual account. This month, I grossed $34.62, which, I mean, if you minus the $30 deposit that I made or the two $15 deposits that I made, you get a net income of $4.62 or 1.10%. Last month was $6.48 in net growth and also a 1.54%. And in case you want to look, 2 months ago, it was my net growth on the account was $4.68 or 1.11%. So it pretty much did what it did in April again in June, which, hey, is great. Making money is making money regardless of how much I made. I mean, in the last 3 months, I've done almost 4% already. This account is actually, which is interesting, is my best performing account that I manage right now. And like I was saying, this is extremely interesting because my Robinhood account, my M1 account are run a lot more risky than my Stash Retire account. And actually right now, my Stash Invest account would be considered a more risky account than my Stash Retire account. And still, I haven't beat any gains yet. As far as my year to date goes on the account, in total, I've grossed or netted actually $8.63 for a total of 1.59% return on year to date. But anyways, let's go ahead and actually pull up the phone and take a deeper look into my overall account. So this is my account right now. It sits at $563.65. This is as of July 20th. So this is like way updated because we're getting to it a little bit late this month. And right now I've done a 5.75% total return on that actual account. Let's go ahead and take a look at my overall portfolio. Right now, 27% invested in a stash, and that's because into Park My Cash, and that's because I made a deposit and bought Park My Cash today. 25% into Delicious Dividends, 15% into Real Estate Tycoon, 5% into Robots Rising, and then I haven't again picked my single stock that I'll be purchasing, but that should be decided here probably in the next like 2 to 3 months. So be on the lookout for that. And then as you can see on my balance, it continues to climb. I think that there's issues going on with this chart, but that's for another video, like I said, in my stash account. And then we'll go ahead and take a look at the actual account history. As you can see, Park My Cash dividend for 26 cents, another dividend from Park My Cash. Actually, that's not right. A dividend was paid for 26 cents, and then a reinvested dividend back into Park My Cash, a subscription payment for $2, which I think is a little bit high. I think it's kind of outrageous compared to other Roth IRA accounts that basically do the same thing. $15 from Navy Federal that I bought Delicious Dividends. And then 73 cents paid from Real Estate Tycoon, which then I reinvested back into Real Estate Tycoon. And then $15 from Navy Federal, from Navy Federal again, that I bought Robots Rising. And then Delicious Dividends paid me $1.14, which was then reinvested back into Delicious Dividends. So this account is actually pretty nice because it does have a DRIP system, so a dividend reinvestment program, which I think is really cool because I don't have to like focus on where these dividends should go or what I think I should do with these dividends. It pretty much is all automatic and just kind of continues to make that circle. You know what I'm saying? I do look to see where this account compares to my stash account here in the next like 2 to 3 months and see if they eventually balance back out to equilibrium, or if Stash Retire is the front runner because I've been able to buy so many equities and ETFs at that lower price because of the little correction that we had January into February, March, April, May. Anyways, we'll go ahead and leave it right there. Let's jump into the question of the day, which is what movie, picture, or video always makes you laugh no matter how often you watch it? For me, this is my favorite video is The Master of Disguise. And I could watch that video hands down like 3 to 4 times a day and I would still laugh almost at every single part. I think the guy is just hilariously funny. I love his acting in that. I think he's just, I mean, for me, it literally is just so funny that I don't know. I literally laugh every single time I see it. So that would be the answer to that question, I guess. Anyways, like I was saying, if you got a question regarding Stash, Acorns, Robinhood, as well as general investing, business, Etsy coaching, and M1 Finance, post those questions down below. Please don't forget to subscribe right up here and check out my Stash Retire Recap May edition. Check out this video right here. And as always, thank you for watching. I really appreciate it.